when we look at the trough to the peak in each of those 4-year cycles, each cycle gets a little bit smaller. The smallest ever trough to peak appreciation for Bitcoin was 2,000%. So let's say that we cut that in half and say it's going to be 1,000% this year, or 1,000% this cycle. Bitcoin troughed around 18,000. So I see an upside to 180,000 this cycle. And I think that's likely to happen next year. My base case is something around 180K for next year. And then over the medium term, we think about Bitcoin relative to gold. About 50% of gold is used for industrial or jewelry purposes. So cut gold's market cap in half, and maybe that's our target for Bitcoin for the next cycle. That would imply roughly 450,000 per coin. And we also assume that Bitcoin is used as a settlement currency for global trade, most likely among BRICS countries, but also some in the developed market. And we get to $3 million a coin by 2050.
Historical data also reveals that each Bitcoin cycle delivers smaller peak-to-trough gains. Even so, the smallest recorded gain was an astonishing 2,000%. Matthew Sigel conservatively estimates that the current cycle could see Bitcoin appreciating by 1,000%, reaching a price target of $180,000, with a high likelihood of this milestone being achieved in 2025. Sigel plans to adjust his Bitcoin holdings based on these signals, regardless of whether the price reaches $150,000 or $180,000. Over the medium term, Sigel envisions Bitcoin reaching parity with gold's market cap, particularly the portion of gold used as a store of value. This scenario implies a Bitcoin price of $450,000 per coin in the next cycle. For the long term, Sigel has a bold forecast. By 2050, Bitcoin could achieve a value of $3 million per coin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So when we look at previous cycles, the pattern becomes very clear. Bitcoin outperforms everything else for 3 out of 4 years. And then in that 4th year, there tends to be a large drawdown, say 60 to 80%. And that down year typically is the 2nd year after the halving. So the Bitcoin halving occurred in April of this year. So 2024, strong year. 2025 should be a strong year. I think 2026, unless something changes, would be a down year. And when we look at the trough to the peak in each of those 4-year cycles, each cycle gets a little bit smaller. The smallest ever trough to peak appreciation for Bitcoin was 2,000%. So let's say that we cut that in half and say it's going to be 1,000% this year, or 1,000% this cycle. Bitcoin troughed around 18,000. So I see an upside to 180,000 this cycle. And I think that's likely to happen next year. So it's a very volatile asset. We can overshoot it on the upside or on the downside. But I'm looking at that kind of technical backdrop.
Okay.
And then we're looking at a number of what we call topping indicators to just tell us like when the red light is really flashing. And if all those lights are flashing and the price is 150K, I'm not going to wait, right? But if we reach 180K and none of those lights are flashing, maybe we let it run. And some of those indicators include the funding rates, so how much it costs to put on a derivatives position. When the funding rate for Bitcoin exceeds 10% for more than a couple months, that tends to be a red light. We're only like less than a couple weeks at this moment, and yesterday's washout eliminated that as well. So funding rate's not really flashing red. Unrealized profits, because you can track on the blockchain kind of what everyone's cost basis is. So that is also, we're not seeing scary amounts of unrealized profits. And then like anecdotal evidence of just widespread retail leveraged speculation. That's a little bit more qualitative, but again, not seeing that as well. So we're my base case is something around 180K for next year. And then over the medium term, we think about Bitcoin relative to gold. About 50% of gold is used for industrial or jewelry purposes. So cut gold's market cap in half, and maybe that's our target for Bitcoin for the next cycle. That would imply roughly 450,000 per coin sometime after the next halving. And then we also have a long-term model, similar to Michael Saylor's, where we assume that Bitcoin is held as a reserve asset by central banks. Although at a very low weighting, we're predicting a 2% weight for global central banks. They hold gold at an 18% weight, so it's very small. And we also assume that Bitcoin is used as a settlement currency for global trade, most likely among BRICS countries, but also some in the developed market. And we get to $3 million a coin by 2050, which would be about a 16% compound annual growth rate. So you observed that the growth rate in the last 10 years is closer to 40 to 50%. So it's a pretty notable deceleration. If gold demand 10x'd over the next year, suddenly there'd be a lot more gold that you would find in supply, right? I think China just announced that they found like some $1 trillion gold reserve. El Salvador's talking about $1 trillion gold reserve. Costs a lot of money to dig that stuff out of the ground. Often higher prices are the catalyst to make it affordable. Bitcoin's not like that. So, I wouldn't say never, but I think a 10x in 2 years, it's beyond what my expectations would be. If Senator Loomis's bill were to pass and we actually did revalue some of our gold reserves and swap it to Bitcoin, that's just not my base case. I'm finding it hard to believe that Congress is going to pass something that puts kind of taxpayer resources at risk. What I would like to see is incentives for Bitcoin mining that maybe give the government a piece of the pie. President-elect Trump has floated the idea of building 10 new freedom cities throughout the U.S. on federal land. So these would be brand new cities, essentially special economic zones that would revitalize a culture of building. They would require a lot of energy infrastructure, theoretically, to build new cities. Why couldn't Bitcoin miners be involved in the establishment of those new cities, help to catalyze some of the energy investment that would be needed, and maybe the government could take a little royalty on whatever Bitcoin they mined if they get tax breaks other ways. So I think there's a way to think about this not in a zero-sum way where we're actually selling gold, but where we're just incentivizing building in the US, specifically of energy infrastructure. And then Bitcoin miners can play a role, monetize some of that energy, and maybe the government can take a piece.
Sigel underscores Bitcoin's critical utility in emerging markets, where traditional financial systems are often unreliable. While developed markets like the US have robust financial infrastructure, Bitcoin serves as a lifeline for the billion people living in countries with inflation rates exceeding 10%. Consumer optimism for Bitcoin is highest in emerging markets like Turkey, the Philippines, and Vietnam, which tend to have younger populations. In contrast, developed markets with older demographics, such as Germany and Japan, exhibit greater skepticism.
The institutional adoption of crypto, I'd say, has still been somewhat disappointing from my perspective. So VanEck's traditional customers are the bank and broker-owned asset managers. Think Morgan Stanley, Merrill Lynch, UBS, heavily regulated institutions that typically set an asset allocation framework at the very top, some variation on the 60-40 portfolio, and then the advisors will sell ETFs or single stocks that align with that asset allocation. Because of kind of regulation and innovator's dilemma, those institutions have been pretty slow to proactively sell Bitcoin ETFs, nor have they altered those asset allocation models to include Bitcoin. So what's remarkable is probably 80% of the ETF holders are individuals or high net worth diversifying away from self-custody or adding to positions. And we really haven't seen those spigots of the institutional asset managers pile in yet. Where the institutional adoption has occurred is at the sovereign level. So there's now 7 countries that are mining Bitcoin using government resources. That number's doubled in the last 18 months. And then the corporate adoption, private and public companies, those holders have tripled their Bitcoin holdings in the last couple of years. MicroStrategy is obviously the poster child, but we count now more than 60 public companies that have added Bitcoin to their balance sheet as a reserve asset. The first Indian company did that this week. So when you compare gold to Bitcoin, what you find is Bitcoin ownership is still dominated by retail. Nearly 60% of the holders of the ownership is retail, and it's underexposed to governments and corporates, and that's where we do expect increased adoption next year, and then hopefully these big wirehouses will put out new models, right? New variations on these 60/40s. But if they don't, that's our opportunity, because VanEck traditionally selling ETFs and mutual funds, but because of client demand, we've started to build some of these models ourselves, very diversified portfolios with, call it a 1 to 5% allocation to Bitcoin. And that's been some of the fastest growing parts of our business. I have to constantly remind myself that Bitcoin is not an asset that is most appropriate to American people, frankly. Like, we all have 5 different credit cards, 10 different payments apps. There's many ways for me to send you money. It's not technically peer-to-peer, but you'll receive it right away. And our institutions are trustworthy, relative to many of the institutions around the world. So Bitcoin is, it can be a hedge against the government either devaluing or seizing your money. And it's most appropriate for the billion or so citizens of the world who live in countries where inflation is greater than 10%. And when you look at surveys of consumer optimism to Bitcoin, you see that the most optimistic countries are young emerging markets like Turkey, the Philippines, Vietnam, and the most pessimistic countries are France, Germany, Japan, right? So it's not only EM versus DM, but it's also demographics, right? The optimistic countries tend to be young and the pessimistic countries tend to be old. So we think of it as a demographic play geared to EM, where fiat currencies are even less trustworthy than the US dollar. And so while the ETFs unlocked the speculative utility, the way for Americans, developed market investors to get exposure to that asset, it's not really the full utility. And you have to go overseas and talk to some of these regular people. That's how I first got my conviction, was through individual conversations with taxi drivers, basically, who said that they're into this asset. And I was working on Wall Street at the time, and I came back and told the trading desk, and they're like, that's a contrarian indicator. You sell when the taxi driver is bullish. And I didn't take that advice. I thought, this is actually the anti-Fed money. It's not going to be something that is initially blessed from institutions who have a lot to lose. It's going to be a retail asset. So I took the other side of that trade, thank God.
Sigel's conviction in Bitcoin's global utility stems from his interactions with individuals in emerging markets, including taxi drivers who view Bitcoin as anti-Fed money. These grassroots endorsements reinforce his belief in Bitcoin as a transformative asset for those underserved by traditional financial systems. While Bitcoin ETF have unlocked speculative opportunities for American investors, Sigel emphasizes that the true utility of Bitcoin lies in its ability to hedge against government overreach and inflation. As institutional adoption accelerates and more countries integrate Bitcoin into their financial frameworks, its role in both speculative and utilitarian contexts is set to expand.
Please like and subscribe my channel.